Hi everybody, how is it going today? So we are going to do a technical analysis on Ripple, and it's very important for us to hold ourselves accountable, right? And to make sure we follow up on our plans. And we also have to look in the past to see what we can do in the future. And we also got to evaluate our risk to reward and our profit that we made over the past few days based on the risk calculations that we made as well. So let's go over this. Before we do, make sure you guys upvote this stuff and Steam it. I'd really appreciate it. And please also like, subscribe, and share the material on YouTube and on Twitter as well. So let's get into this, guys. So let's, I know the chart looks like a mess, but I'm actually going to clear it all up. Okay, guys? Going to clear it all up. So all of these are actually off the table right now, okay? All of these plays, we were basically planning for a possible breakout, and none of them happened. In fact, this one right here, just as an example, I took it as well. I'm sure some of you guys took it as well, and we lost money on it. No problem at all. As a trader, we have to remember that we focus on winning over time, and we play the game of probability. Make sure you guys stick to those stop losses. Holding and hoping, it never works, guys. Trust me, okay? When I say holding and hoping just does not work if you are a day trader. You got to make sure that you know how to cut these losses extremely fast, right? Just as an example, sometimes you're going to risk 1% and you lose and it goes down. You risk 1% again and you lose, it goes down. But hey, maybe the third time when you're risking 1%, you're going to gain 5-6%, and it offsets all of the losses that you've made. And I always recommend, in general, right, considering buying on the dip. This is very normal logic to buy on a possible dip where there's a support zone, and ladder to make sure you minimize your risk. Laddering is a way to have a better, what's the word I'm looking for? Dollar cost to averaging, okay? You get a better dollar cost to average, so you average out the prices for what you buy, which we'll actually get into that in a lot of detail this episode. So, and the criteria for a breakout is always the same for me as a trader, right? I'm looking for a successful candle close above the 15-minute chart with a lot of volume. And always remember, I'm not a financial advisor in any way. I'm just sharing my thoughts with you guys. And please always remember as well that it's always your risk, your choice, and you're accountable if you guys lose money, okay? So what we were saying basically is that always bear in mind that impulse waves can fail, right? And don't ever discount that we can't downtrend. Good traders react when all possible outcomes are planned. So we got that out of the way now. So before, what we were hoping for was a breakout. We reached the critical resistance zone right over here, and unfortunately we failed, right? We failed, and there you go. And I mentioned that right here, okay? If BTC corrects, these setups are off the table. And I mentioned that very clearly in my last episode. So some people may have gone in some of these trades, for example, this one specifically, which we'll get into. But if BTC corrects, guys, all of it is off the table and we've got to reevaluate. So just want to make sure that you guys understand that, right? So here we had clearly defined support, right? Super clear support right there that eventually broke. So since we had a clear support, don't discount that it might fail. And usually it does eventually when it corrects. So if BTC corrected further, we would have seen this fall, and that we actually did into the recommended zones over here. So that's now done as well. So now we're going to be looking at some key. I got to stop smoking cigarettes. I smoke like a pack. Yeah, I don't like smoking actually, like a pack a week. I don't even know why I do. I never have an urge to smoke. It's not like I crave it. It's just like, okay, sometimes I'm bored. I'm just going to go outside in the -40 weather and just have a cigarette or something. I think I'm going to quit smoking. I know it's pretty easy for me to quit because some weeks I go for like, or some months I go for like no cigarettes for, 2-3 months or something. And then all of a sudden it's like, okay, sure, I'll just smoke again. But I know it's not a good lifestyle to have. And I don't recommend smoking for anybody. Coming from someone who smokes, that's pretty funny. So we were hoping for a breakout above this key zone right there, which is still going to be a key zone, okay? It's 100% going to be a key zone, which we'll make sure that we keep in mind of. And here we have our fib extensions, which I think now we can take off the table. So what I like to do is take things off the table one by one to see what could possibly work and what can not work, right? So these are all off the table now. Now what I want to talk about is this specific one right here. If some people entered it, okay, great, right? But if you entered my other setups as well, great. But if you only entered this one out of some other setups that I said I was going to be taking, then you might have, excuse me, if you only took this one, you would have lost money. So this one was basically entering as soon as we broke out right around this region right here, okay? right in here. And I'll actually put my mouse over here so you guys can see it now. Let's delete this green box as well. So this was the setup right there, where you would have entered it right here, just as an example, right? So you would have entered around the 116, 115 range. You would have tried to target something really high up there, and unfortunately it just failed, guys, right? Well, if you entered right here, great. That would have been great, right? But you know, it depends on when as well. But after, I actually posted this video after it broke out, and I was just basically recommending right here to go into a position. You would have entered around 116, 117. You would have targeted 125, and you would have been stopped out at 113, right? So you would have lost 2.59%. But if you guys remember, the day right before that, I recommended this trade as well, and this trade was very successful to enter around 109, right? Enter around the 109, 110 range, stopped out about 108, which we never actually got to. So it was a really low risk. I can't even get it in here. I'm going to zoom in more right here. So actually, no, it was 110, I believe. Yeah, 110, stopped out at about 109. So we were risking about 1% only, and we were going to target about 115, right? But you guys probably wrote it a lot higher, I'm guessing, so I'll take the average of it there. So if you notice right here, you guys would have been up 6.3%, but on this trade over here, you guys would have been down, where was it? This one here, you would have been down about 2.5%. So if you take, which is rounded up, okay, 6.5 minus 2.5, you still would have been up 4% overall. So if you played, for example, a $20,000 position and you were 4% up out of both of these trades, well, now you're 50-50, right? 50-50 is actually a really good win-loss ratio, and you would have been up $800 still. So this is how I see trading. I don't see trading as one trade and I try to win it. I try to win many trades over time, and I acknowledge that I know I'm going to eventually lose a trade. And until we get over that hump, until we start to understand that we will unfortunately lose trades here and there, that is when we are going to be able to become better traders. Excuse me there, I'm really embarrassed for coughing, but I don't have enough time to mute the microphone when I have to, so I apologize for that. So now this is a really key zone for us to break, as we can tell, right? So now we got to evaluate what happened, and what most likely happened was we didn't really get the fifth impulse wave that I wanted, like an extended one. So now I'm gonna have to recount all of this. And call this my 5 right here. 1, 2, 3, 4, 5. This part here, Bitcoin was still correcting, but Ripple decided to just go on a tear. And if I count my Elliott waves in this one here now, we get 1, 2, right, 3, perfect, 4 actually, and a 5, which is actually a perfect one. I should have seen that coming, but I expected this one right here to make it like an extended fifth wave, like a very strong one. So it created almost like a double top, right? What we can see right here. Pretty much a double top, right? Yeah, I'd say so. So now we're going to have to evaluate what is going on again. So how do we derive this first support zone right here, which is actually what we're in right now, okay? I do believe it's going to correct a little bit further now. So how did I derive this zone? Well, it would have been upon the breakout and also right above wave 1 territory, which we've now overlapped by it. So we know that this is not an actual, it's not going to continue into an uptrend because this long candle right here is completely overlapping the wave 1 territory. So this one is actually off the table now as well, right? Completely off. Now, where's this target from right here? Let's see if we can zoom far back just to show you guys right here. So this is actually a pretty strong support zone in general right now, because this acted as a major resistance, right? So now it becomes a support, wave 1 territory right here, wave 4 territory as well. So I'm definitely going to be considering this as one of a pretty decent support zone for now, but I don't think it's going to hold, to be quite honest, okay? I don't think it's going to hold, so I'm going to take it off the table right now. And we're basically just going to go based on fib extensions and see what's going on. And we're going to look at where is a better possible entry. We have to keep in mind that I don't think Bitcoin is done correcting. And because it's not done correcting, then, just give me a second here. I don't want to lose that. There we go. Okay, I'm going to delete all of this now. Because Bitcoin's not done correcting, we got to wait for the best case scenario. And we got to just try to anticipate what could possibly happen. So let me explain to you guys what happens at the end of 5 wave counts like this. We got 1, 2, 3, 4, and 5. What we do is we take a Fibonacci range for wave 2 of just wave 1, and then we take Fibonacci range of wave 4 for just wave 3. So don't ever get into this mistake of for the wave 5, you take a Fibonacci range of just 5. Make sure you're taking a fib range of all of it from the beginning, the entire impulse wave, okay? That's really important to understand, guys, that you don't ever do this. You have to take it all the way from 1 for all the 5 waves together like that. In my beginning days, I used to always take it from 5, and I was like, what the heck is going on? So I have to be very firm on that rule. So if this is now waves 1, 2, 3, 4, and 5, which makes a perfect 5 count in my opinion, where the heck is the correction targets? Let's take a look at where we can find possible supports. That's actually really nice, just like that. 1, 2, 3, 4, 5. So let's take our Fibonacci out now. Let's take our Fibonacci tool out just like this. It's been a while since I broke out like that, right guys? You guys probably missed that, huh? I bet you did. So now we take our fib tool and we see that, okay, well, if all 5 waves count is done already, is this really a decent retracement? Is that really decent, guys? Right here, 2, 3, 6 for the entire wave. Nah, I wouldn't really say so. Like, I don't think this is done correcting at all. I mean, the way I'm seeing this is 1, 2. Okay, I see this as 3. I see this as 4, and I see this as 5. Right, something like that. And we'll call this somewhere B. Who knows where it's going to be? I'm not too interested in that right now. Let's say that all this was, who knows, B, right? We'll just say. I do expect another type of run to come down. So what I'm looking for right now is A, B, C, okay? I'm looking for A, I'm looking for B, I'm looking for somewhere C. I don't know if it's, take this point as an arbitrary point that I just picked. So we definitely broke out of this ascending triangle. Awesome, right? So now the next critical point would probably be right around here as well. We'll just take it across these 2 peaks, and that would make a lot of sense, wouldn't it? Do you guys see what I mean? We're taking the wick end of here, we're taking a bull trapped region of here, and this region right here as well, right? So now we're going to look for a correction target somewhere, and we're going to say to ourselves, where are some possible targets that had support before, or resistance or support before, that can now offer some support? So this is a very relevant area as well. And the next relevant area is this. What we like to say for Elliott wave is that after 5 wave counts are done, ABC likes to correct. Okay, it likes to, and you guys will understand the logic behind this as well. The logic is that it likes to correct to the wave 4 territory, and you know, sometimes one's not even there, for example, because wave 4 territory will offer a really strong support, right? Happens quite often where you can call it like a double bottom right here, 1, 2, kind of like that, right? So this happens quite often. Therefore, because it does, we like to take a support range right here. So let me just give you guys an example of a few different cost averaging scenarios. So would it make sense to you guys if it actually ended up landing right in here as well, right? Yeah. And then the next support zone is right here as well, okay? Right around there. So and this actually makes a really good support zone, because not only I honestly cannot see it coming down lower than this unless Bitcoin ends up correcting, right? I see and I'm gonna write it down actually. Give me a second, I'm gonna write it and come right back. So what I'm trying to say is that right here, notes support range 3, which is this one right here, I'm gonna call it, okay? This guy would be support range 3. All right, so this is actually a really nice chart now, right? Take a look at it. So this support range 1 is derived basically from these regions right here. And this one here is basically between, I didn't even write out the price, let me write it out here. It's between like 96 and about $1.01. Yeah, that's a good price right there, 96 to $1.01. 96 to $1.01. I'm gonna leave out the 3rd digit for this one. Well, I'll write it. So we'll say $1.01. Yeah, $1.01, just like that. And where's that one derived from? It's derived between basically the 3-2 fib level. Okay, that's really important to understand, that these fib levels actually act as a major support all the time. So right around here, This one's right around here. And these are just zones. Don't forget that I don't do time analysis. And because I don't do time analysis, and I don't really factor in the time too much since I'm a day trader, put it that way, right? And you know we could possibly hit all the way down here if we get in a very, very extended type of C, but I don't really see that happening, right? I'm calling this as a C1 possibility. I'm calling this as a C2 possibility. So it can go from A to B to the C1 or C2 ranges. And I'm going to give you guys some really clear examples of dollar cost averaging. So the range 1 is derived from this low point right there, around the 96, you know, just in this general area, right? Because we extended it very far, like I mentioned over here on the left, this is about the 98, 99 cent range. And the dollar is obviously a very strong psychological support, right? So right around these ranges is good. C2 is derived from wave 4 territory. The wave 4 territory is about 0.893, and just to choose a little bit of a higher range above the 0.5 fib level as well. And the C3 range, or the support range 3, is derived from the wave 1 territory. Now that is a pretty good retracement. Like, don't discount it for a moment, because I do believe that Bitcoin will eventually reach a wave 5, and then it will come down like that. Now we have to keep in mind that the wave 3 range can be hit if BTC corrects at the end of its 5th wave impulse up. And assuming BTC begins impulse wave 5 soon, a more likely support range is support range 1 and support range 2. And that's important to make note of. So let's say you had a position size of 100%. Okay, we'll say it's 100%, just as an example. And now you are willing to play 1/4 on the support 1, okay? Support 1 on what, say, we'll be very specific actually. We'll say $10,000, okay? Now support range 1, you're willing to allocate 25% of it, or that's 25,000 coins, okay? Sorry, we'll just be more specific actually, okay? Well, let's just say you wanted to play a position size of 10,000 Ripple. Okay, instead of dollar, 10,000 Ripple. Now, for support range 1, you want to play that much right there, okay? Support range 2, this is how I do math all day, guys. You want to play another 25%. And support range 3, you want to play 50%, right? Which is now going to be 5,000 position sizes. Now, let's just say it downtrended here, and the rest is up to you guys, right? If you confirm an uptrend, then what you would want to do is maybe buy into strength, right? That's usually what I do. I allocate a specific amount, and then I buy into strength if I've confirmed an uptrend. Now, let's go to my dollar averaging Excel sheet here, which I highly recommend that you guys make one as well. Let's say on the first one, right? We're gonna buy it around this range. So we'll just take the average and say 99 cents or something like that, okay? 99 cents. Actually, I just changed this to $1. It's a more round number and less of a range. So 98 cents. Good number right there. So now you're going to buy, whoops, this is XRP, that's XRP. I want to buy 2,500 at 0.98, okay? Sorry, it's I wish I could use it on 2 monitors here. 98. So now you would have spent yourself $2,450, right? And let's say it goes lower. Let's say it ends up actually going lower. And we're not taking into any stop losses to account for now. I'm just talking about laddering your buys when you're expecting an uptrend, okay? So now let's say it goes to around this range and you bought it at, say, 91 cents, okay? This should probably be lower, I'm guessing. It's kind of a broad range. Yeah, I'm gonna lower this to 92 cent range. Like literally, like right on the nose, 92. It's a lot better in my opinion. This one's a pretty broad range too, but I think that one should be for the third one. So now let's say you bought at 0.91, we'll say, okay? Another 2,500. So what this does now is instead of getting your base price to 9,800, or sorry, 0.98, and you added 25 more, it actually does a dollar cost averaging out for you, right? So now let's say it falls down low. I'm talking about for the longer term holders, and this is what I plan to do to hold Ripple, because I don't know, I feel like holding Ripple, and this is what I'm going to do. Definitely I'll have a stop loss as well. My stop loss will probably be down over here though. That's the truth, okay? mine's going to be pretty low. And now let's say it gets pretty low at 5,000. It gets to around these ranges, around the 8.3 range, and let's say you end up buying 0.82, right? And now what you've actually done is you've averaged out the cost to 0.8825. So now what you're going to be getting yourself into is, let's say you ended up getting to a position at 0.88, right? Right here. That is where you would actually average out your entire price to. Does this make sense, guys? Okay? Does that make sense to you right there? Okay? Even though the price fell to over here, you're now allocating, because you're buying more and you're laddering, well, the next target, if it was the bottom and it reached it there, it would actually be roughly up there, okay? Now, this is not ideal for inexperienced traders who do not know anything about risk, okay? I'm talking about this from a completely different side that I don't really talk about a lot because I don't want to introduce concepts where people might lose a lot of money. So if you laddered your buys, this is what we would get, right? In these three zones where 25% was allocated for support range 1, 25% was allocated for support range 2, and then 50% of the rest of what you want to play is actually allocated for support range 3. Now, how much did you play total? Well, your position size is 8,825. So you're spending a lot less to get a lot more, right? So now your averages out, even though you bought it at ridiculously high prices, like 9.8, 9.1, but because it got to the very low support range and you literally doubled up on it, which I don't recommend. Once again, I'm not a financial advisor. I'm just giving you guys a perspective that you might not have seen before. So now you average out your cost to 88.25, okay? 88.25 right here, and I do this all the time, guys. I manage, this is what it means by managing your position, guys. Laddering can be a very complicated process. Now, I would choose a stop loss below region 2 roughly, right? So I'm okay for this. Now, risk to reward, you also have to keep in mind probability, or not probability, percentage, right? So if you talk about percentage or risk to reward wise first, that's a pretty decent risk to reward where I would cut my losses around, say, realistically 70 cents, right? I'm a big risker. I love to take risk because I believe that without risk, there's no possibility of reward. And I'm cool. I'm perfectly cool myself to lose 20% of $8,000, okay? That is me. Now, your ability to take pain might be incredibly different than mine, okay? So you have to consider that as well, all right? I'm just going to give you guys a bunch of different scenarios for risk to reward. So now this is a great risk to reward rise around about 2.0, we'll say, okay? We'll just get it up to about 2.0, where you'd be stopped out at about 71 cents. You would shoot for this high right here again and assume that there's no wave failure and we'll eventually get there, right, for a longer swing term position, and you're entering at 8825. Now, is that a good risk to reward ratio? 2.0? Absolutely it is, okay? 100%. It's a great risk to reward ratio right there. Phenomenal risk to reward ratio we're talking about, okay? Now, let's look at another scenario. Another scenario as well, okay? I'm going to move this over here just to give you guys a quick example of how I play. Let's say you entered a position on support range 1, which makes sense, to be quite honest, to enter on it because we have an A, B, and it almost looks like an exact zigzag is going to form. If that was A, B, right, and we take our C point somewhere there, well, our one-to-one extension is slightly above the 96. So this is actually very bullish as well. That sounds pretty, like it makes sense to enter a trade, doesn't it? Okay, now let's play the game of probability here with risk. Now, let's say you entered a trade right there, and you allocated yourself a very tight stop loss, and you still stuck to this amount right here, okay? You still stuck to this amount of 2,500 Ripple. Now, let's get my long position in here, and you got it around, we'll just say 97 cents, somewhere right there. Now, if that was the actual bottom, right, then we would shoot for the same thing. We would shoot for at least this high right over here. You would allocate a very tight stop loss, super tight. We're talking about like, I don't know, like 2% here, okay? 2% you lost if you got stopped out. So here, is that a good risk to reward ratio? Yeah, 10.38. Absolutely, if that was the bottom, right? You're risking only 2.353% to gain a possible 26.26%. But now, let's say you got stopped out. Bam, okay? You got stopped out. You went into a position at what was it again? I can't remember when I entered it. 975, we'll say. So let's say you went to a long position at 2,500 coins at 0.975, and then you actually got stopped out. Let's go over these scenarios right here. So right here, the target was 0.227, about right. Sorry, 1.227. Actually, I should put in here as well, 1.227. Let's change this one to 975, and let's say the stop loss was at 9.5 on the nose, okay? It's a pretty tight stop loss there of only 2 cents. So here you got a chance to lose 2.6 and you got a chance to gain about 26% there. So you're entering 975 and your target price is 1.227, and now your stop loss is at 0.95 right there, right? So this is what we get. It's about the same risk to reward, 10.2 risk to reward, 10.2 risk to reward right there. Now let's say you actually lost, okay? Okay, you lost. You could have lost a maximum of 2.6%, and you know what? It was a very small amount you would have lost. You would have lost only 63.48%, okay? Or sorry, 63.48. Now you're like, darn, I already played 25% of my position size. It's going down. Well, if it goes down, then it's going to reach possibly this support zone here, right? Now, what we're going to say is, okay, I'm going to buy right here another 2,500 because I'm going to take the risk, okay? So this is off the table now, and then we go down here. So now let's say you entered a trade at 91, we'll say, okay? Let's be very specific. 91, and now you're also targeting the high again, right? It makes sense to target the all-time high, right? If it's the very bottom. That's why I'm using these scenarios. And now you would be stopped out slightly below it, slightly below the wave 4 territory, right? Let's say you chose a very tight stop loss of about 4% right here. Okay, now this is a risk to reward of about 8.52 to 1, right? So the risk to reward keeps getting higher and higher as you go down. And you know, if this is the very bottom, that's the way I see it at least. It could be completely wrong. I'm no finance major. I'm no economics major. Like, I don't know anything about business at all, okay guys? This is just how I've been playing the game of probability, just based on what I've learned in school, right? I studied mathematics and engineering, right? So that's my background, and I've applied some of the theories to trading as well, and I don't have any formal training whatsoever with risk management, whatever. Everything that I've learned is all on the fly, and it has been working with ridiculous success, put it that way. So if I'm doing something right, then awesome, right? Now, let's say that you actually, let's say you didn't target up there and you chose the next resistance point up here, okay? Let's just say that you chose this point up here where you got stopped out right down here to begin with, but now you're going to shoot for the next support resistance point. Well, if you look right here as well, now the risk to reward is about 2.6, right? If you were successful, okay, if you were successful here, and let's say you got stopped out and you were targeting, well, if this is the support zone, it now becomes a resistance, so you're going to target $1, for example. So if you targeted $1 for that one and you entered at 91, let's go right here now. Now you're going 2,500 coins again, okay? Yeah, I'm all about the Excel, guys. I got some massive Excel sheets. This is only like 1 of 5. Now you bought it at 9.1, right? And your target sell would now be $1, okay? That's pretty good, I'd say. Your stop loss was, where was it? Let's just say 875, and let's just say this one was $1. Okay, 875, $1.91. 91, $1, 875. What? Oh, jeez. I gotta copy all of that over. I gotta start again, sorry. 0.91. I'm just gonna move it over on the other screen while I do it because it's so much easier. I got 3 monitors and this one's, yeah, it's a lot easier to do it that way. So take a look at this now. 91, no, you guys can't see it yet, that's right. Target price is $1, resistance is $1, stop loss is, it's actually 875. So now what we see is we see our risk to reward like this. Let's say this one was actually a successful trade, right? Let's say it was a successful trade, because the lower you get, the more likely you are to end up bouncing, right? It just becomes that way because you're getting to more relevant Fibonacci points. It can only go down so far before it eventually bounces because we're in such a big bull market in general on the weekly time frame, right? So are we going to assume that's going to go back to 0? No. Are we trying to catch a falling knife? Not really. What we're trying to do is take very risk calculated approaches to the market, right? So now let's say you ended up entering there and you won, right? Wicked. Well, you just lost about $63 on your other trade, but you won $224 on this trade right there, right? So there's so many different scenarios of risk that we can play with and probability, right? So you guys got to make sure that you're keeping this kind of stuff in mind always, that, you know what, big whoop-diddy-do, guys, that you lost a trade. Honestly, big whoop-diddy-do that you lost a trade right there, okay? Doesn't even matter, guys, because you just won the one on the bottom. So you take your 224 minus 60. Well, awesome. Your net profit is actually, you know, like $160 or whatever there, right? So don't worry about winning all of them, guys. All that matters is that you win some of them. And I'm just giving you guys some like risk to reward scenarios, okay? Very, very loose scenarios. Now, let's say another one, okay? Another scenario where you're like, you know what? I feel that it is so close to the bottom, I'm going to get stopped out. You make that decision as well. I do it all the time. Do I stop myself out, or do I just know that I'm very close to the bottom, right? Do I cut my losses right now, or do I even add more to my position to ladder my buys because it's getting really close to the bottom? Now let's look at that scenario as well, okay? Now let's say you went down there, and now this point ends up becoming a resistance because that's where we're facing right now, around 92 cents. Now let's take a look at another scenario as well. Let's say you end up going with the 2,500 coins at 975 there, right? 975. This is this scenario, or sorry, 91.91. And now we're gonna look at another scenario right here, where we're gonna buy a few more around, say, 81 cents range, okay? But because we still have a possible 5,000 that we can play, right? And now we're going to go with 81 cents that we're going to buy. Well, take a look at this, guys. Now our average price is about 84.33 cents, right? So let's say we ended up targeting right here above this pretty much right there, right? So I'm just going to go in, open my long position now, right? So now my average cost is 0.8433. Take a look at this. So now your stop loss would be set. Let's go here first. 8,433, right? So now your average price is right there. That's not bad, right? And you go up to right about here. Take your stop loss slightly lower than swing low, and your risk to reward is actually still pretty bad, to be quite honest. This is a horrible scenario to be in as well. But you know, it's about 1-to-1. It's, you know, you got a chance to win 10%. You got a chance to get stopped out and actually lose 10% still. If you think of it that way, you know, I'm just trying to build up some scenarios for you guys in your head of how we can get a better cost averaging, right? Of course, we would get a better scenario if you truly believe that this is the bottom. Then you could even target all the way up there, and you got yourself a ridiculous risk to reward ratio, right? I mean, that's now a ridiculous risk to reward ratio. But of course, you got a chance to lose 10% as well. Now, if this actually ended up coming all the way down here, right, just for some reason, and it hit the 618 Fibonacci level here, well, and then does that mean that this is now the start of the next impulse wave up? Well, it could be, most likely as well. It's going to try to at least break the high here at 122.70. And if you think of it from a risk to reward ratio, where you can risk about 16.92%, and you can gain, for example, 45%, that's actually a really good risk to reward ratio of 2.72 for your potential gains. But you got to keep in mind the percentage that you can lose, which is actually an extreme amount as well, right? 17% is pretty big, right? So now if you actually look at here, I'm just going to go to, say, this one here, 8433, and now my target price is, say, 1.27. My stop loss is about, where was it here? Say 70 cents. 70 cents right here. Oops, 0.7, 1.227. Like, that's a pretty, no, it was way more than that. Hold on, I'm doing on the wrong, I may as well just do on this one since I'm here already. Okay, there we go. So now you're in a position size of $6,000. Your target price is 127, your resistance is 127, your stop loss is about 0.7, or you can make it tighter, whatever you guys want, right? If you believe it's really the bottom, you can make it 0.75. Your risk to reward goes up to about 4.11. Decent, not so bad at all, right? You got a chance to lose now, only $702, right? But you got a chance to win $2,900. So we have to take this game of probability every time, guys, okay? You have to take this game of probability and see it from a very, from a perspective of math. That's all that I see this game as, guys. I just see this game as pure and simple math. And I just simply wait it out. And I see which is a good zone to buy in. So it's up to you guys what you do. I'm not your financial advisor, although you guys can hire me if you want. I charge, I think, 72 Bitcoin. Yeah, I've reduced my rate from 82 Bitcoin to 72 Bitcoin. So yeah, and I've never even done any consulting at all, but I don't know the first thing about giving people financial advice, guys. Even a lot of people have come up to me before and they've asked me, right? Oh, can I hire you from some lessons? I wouldn't even know where to begin. And, as much as I would love to help people, I don't have the time, right? My job is to focus on creating content for the public. So even if someone hired me to help them, right? Well, I'm taking away from everyone else that I'm helping for free, for money, which is actually not really fair to everybody if you guys wanted to hire me. Does that make sense? I'll say that again. If you guys even offered me something like $250 an hour, which is reasonable, yeah, sure, I'm making money from my time, but it's taking time away from everybody else. So in order for me to actually do some sort of hiring, that's why I'd have to say, like, it's gonna have to be like a ridiculous amount, because it takes away from my trading, it takes away from my TA, and it takes away from helping everyone else out as well. And I was very serious when I said to someone, if someone wanted to hire me, I would charge no less than $1,000 an hour. So I just want to be clear about that in case some people were wondering, like, if they wanted to consult with me, right? I don't know the first thing about consulting. I don't have any experience at all. I would just talk about it from my perspective and how I've had success. So anyways, this is all I want to leave you guys with, to be quite honest. I just want to leave you with support zones today and just give you some basic examples of risk to reward setups that you guys can keep in mind and into consideration. So that is it, guys. So make sure you guys understand that these are the possible scenarios right here. I don't know where it's going to possibly end up, but I do, like, it could even end up right here. You never know, right? This could be a support zone as well. I doubt that will hold, to be honest. Like, let's go look at the indicators as well now, okay? Let's see if it's even possible. I mean, maybe if it was that bullish, okay? I mean, we look at the candle, like, it's horrible, guys. That day's candle was a bearish engulfing candle that just ended up destroying it, right? And we see that it was completely rejected on the daily of the 55 moving average. We probably also see the volume slowly decreasing as well. Like, it's only a little bit in the day, like a quarter into the day, but that's really a sliver of volume right there. So I do believe that we're going to be in a correction zone or correction phase for a little bit. It's going to follow alongside Bitcoin, right? And we look at here, is it going to level off or is it going to come down? We really don't know. Is this even a valid count? No idea. So what we got to watch out for is, where's it going to level off, guys? This could be a possible buy zone right here. I just want to keep in mind, right? So we don't really know. It's up to you guys how you decide to ladder your buys. It's up to you guys to decide how you want to manage your risk and where you want to enter. Nobody can tell you when to enter exactly, because you guys got to understand that it's not as easy as copying a trade. Like, think about it for a moment, okay? Like, nobody is going to start tweeting or telling you guys about how they manage their risk and how they shed their positions and how they add to it with laddering, right? It's something that just cannot be tweeted or taught. Like, or it can be taught rather, but it's not as easy if you guys are starting to see as just buying one position and hoping and then waiting. No, it's not like that, guys. You have to manage your positions by laddering, by managing your risk and taking care of your positions like that, by knowing when to reduce your risk by selling, when to maybe add on more as well, right? There's so many variables to consider, but at the end of the day, all that it comes down to is math. Really, it's all about managing your risk to reward. So this is why in this particular technical analysis video, I'm not really going to point out specific scenarios for you guys. It is really up to you guys. But what I plan to do, because I'm a boss, not only that, my tolerance to pain, I can assure you guys, is much greater than a lot of people out there because one, I'm experienced, two, I understand risk management, and three, I understand dollar cost averaging as well, and I also understand longer term holds. So I definitely will be laddering my buys while taking into account shedding some risk and reducing my risk as well, right? By selling off some of my coins as it goes down maybe, and then adding even more, right? So you gotta take so many things into consideration, guys, all right? So I just want to leave you with these support zones, which I have a chart on Steemit. Make sure you guys go to Steemit to upvote it. I'd really appreciate that, where you can also see detailed charts as well, okay? Other than that, have yourselves a great day, guys, and I look forward to seeing you down the road. Bye now.